Hi guys, welcome back to our YouTube channel AlcoWise. As with the last video, we discussed the quarterly results of Federal Bank, and you might have seen the previous 3-4 videos. We are mainly covering quarterly results of companies as and when it comes out. So today we have Molloy with us, and we'll be discussing the cement sector in general, the overview, and the quarterly results of just announced Ultratech Cement. So it was announced today in the afternoon, sometime in the afternoon. So we'll be discussing that in detail. So welcome, Molloy.
Hi, Kalyan.
Hi.
Okay, so let me start by sharing my screen.
Sure.
Okay, let me know what's visible.
Yeah, good to go.
Okay, so I'll start with an Excel sheet where we'll look into some of the interesting numbers. Okay, so this sheet was prepared in last year, around January to February. Okay, so I'll come to why it was prepared, but let us see in the cement industry what exactly in order to understand the outlook of the cement industry, we need to understand few things, right? So few things which we need to understand will cover step by step. So what exactly we need in the cement industry as a raw material? So the raw material is a limestone and gypsum, and that is like and from the energy perspective we need coal. Okay, so 1 ton of cement, in order to manufacture 1 ton of cement, we need around 2.2 ton of limestone plus clay. Okay, and for the production of the 1 ton of cement, we need around 300 kg of coal.
Okay.
Okay, now we factored in the price of the limestone, clay, limestone gypsum, and the clay, and the coal, and then we estimated uh, the the energy cost, which comes to around 17%,
Yes.
and the raw material cost, which comes to around 59%. Okay, so per ton of cement price is around 7,800, because a 50 kg bag of cement cost around 390 rupees. So we came to a price that per ton of cement production, per ton of cement cost around 7,800, and we keeping that in mind, we found that the operating profit margin, keeping for the raw materials and energy taking into consideration, the operating profit comes to around 24%. Okay, so
Yes.
this is typically a typical number for the cement industry, that the operating profit margin is around 24%. Okay,
Okay.
so now if we look into the figures of the Ultratech cement, let's see the operating profit margin of the Ultratech cement over the few quarters, say from 2019. If you see 20%, 19%, 23%, 27%, 26, 25, 26. So it more or less matches with the number 24%. Okay, so now why I was telling that we prepared this Excel last year during the winter time, because at that point of time also there was a concern of inflation, and the LNG prices were going up, so was the price of the coal. So we tried to estimate, because of the inflation, what would be the impact of the cement industry. Okay,
Yeah.
so we did some price adjustment with respect to the raw materials and the energy. Okay, and we came to a conclusion that uh, because of the high inflation environment, the operating profit margin of the cement industry would go down from 24% to 17%. And when we arrived into this number from 24%, that it will come down to 17%, there is a shrinkage of around 7%. I took some position in Ultratech Cement. Okay, so you can see here on 14th of February 2022, I sold my position at a price of 7,127, 7127. Okay, so as on today's date, if we look, the
Yeah,
price is
6,400
around
around. Yeah.
6,400. So
Hmm.
we approximately we can say that we got it right last year, and now let's see, figure out what can happen into the future, whether we can be right in the next year as well. Okay, so now what are the near term challenges? So as you have seen that the major cost is for the cement industry is the raw material and the energy. So energy cost would not go down from here, right?
Yeah, that's
The
for
reason
sure. And
that
what's happening in in Europe, I think that would either be same or it might go up.
go up, right? Because there is no supply of gas in Europe. The as an alternate fuel, coal, though it's a dirty fuel, but it's a probable solution
Yeah.
to cater needs during the winter, right? So,
Yes.
so with that keeping in mind, the coal price would certainly be not be going down. Current price is around 350 uh, 3 rupees 350 per kg. So the coal price would most likely remain same or it should go up. Okay. And also the raw material price, which is right like contributes to around if you see around 59%, the raw materials is limestone and gypsum. Their price would also predict as we are predicting that it would not go down. Okay. So keeping in that in mind, it would be if the estimated operating profit margin is 17%. Okay, so most likely in the next coming 2 3 quarters, the operating profit margin may hover around 17 to 16% for the industry as a whole. Okay, so in that perspective the industry outlook looks to be negative, right?
Mm,
Now
yes.
Ultratech is one of the cement major. So now let's focus on their numbers. Okay,
Yeah.
so how they have posted the results. This was our outlook 1 year back, and let's see how Ultratech has posted their results. So here we have the estimates. This is the estimate from the poll of the Economic Times. Okay, and this is the this quarter numbers. So if you see, the revenue estimate was 13,769 crores, and they have correctly predicted, and the company came out with similar number of 13,893. Okay, but the operating margin, as we have predicted 17% earlier, the operating margin the as per the consensus estimate was around 16.13%. But if you see here, the operating profit margin, actual operating profit margin, has gone down further by another 3%, which is alarming, right? So that took down their net profit, which was estimated to be around 929 crores. They came out with a number of around 756 crores. So clearly the results are disappointing. Okay,
Yeah.
so now from the numbers, if you see the numbers, it's evident that the results are disappointing. Now what next for this company? Okay, so okay, can they beat the estimates and recover in the next 2 3 quarters? Okay, so let's go back to the screener, and if we look here, you can see the revenue numbers. This being a large cap company, it's not that it will the revenue numbers would grow in like 30%, 50%. That's not possible for a large cap
Yeah.
company. So if you see here, the revenue numbers is growing at a decent pace, and if you see the 3 years number, the in the 3 year sales growth is around 8.25%. Okay, and now let's see the this quarter the results are no doubt poor. The operating margin was 23% in September 2021. Now we have 13%, right? So now in December 2021, the operating profit margin was 19%. Okay, so now from 13%, even if the coal prices go high, even if the gypsum prices stay stable, let's say still they find out some ways to improve by another 2%. So their number, let's say that it would become 15%. So it was 19% earlier. If they come to a number of 15%, then their top line means the revenue has to grow approximately around 26 to 27% to
Mm,
come at a break even. By break even, I mean that they will post, if they have posted in December 1710 net profit, they will post somewhat similar numbers over here, right? So here we have, if you see, there is a tax adjustment. The tax was -5%. Here the tax is 31%. So let's compare the operating profit. Okay, so operating profit in December was 2419. So if they want to come from 1865 to 1865 to 2419, their revenue has to increase by 25%, 25 to 26%. So
Correct,
is that
correct.
possible for a large cap company? Seeing in last 3 years number where they are growing at a pace of 8%, it doesn't seems to be a possibility, right?
Yeah,
And
yeah, correct.
seeing these numbers, what I feel is that even in the next 3 quarters, they will post a numbers, the net profit would be negative with respect to the last year.
Okay,
Okay,
okay.
so with this view in mind, so we need to make a fresh investment. Most likely no, because even if you make a fresh investment over here, it's and being a large cap company, even if it doesn't go down from here much from here, but I don't see a much scope for going up from the current levels. Okay, why? Because the company, if you see its PY is around 27.8%. Okay, so
Yeah,
27.8% PYE, then with the PYE, a company has to grow year on year at least at a decent rate of 20%, right? But
yeah,
what we can predict from numbers and with their impact on the operating margin, that it would be a struggle for them to even to grow by more than 1%, right? Most likely they will come up with a negative number. So with that
yeah.
view, the industry as a whole looks outlook looks negative, and so is the cement major, Ultratech Cement.
Okay. And I
Their
also wanted to ask about this Adani deal with Ambuja Cement and ACC. So you see a consolidation kind of thing happening because these two would be like these three would be like Ambuja Cement, ACC like taken over by Adani Group.
Right, that's a very good point. Let me talk about that as well. So if you see here, in order to improve into their operating margin, they a bag of cement of Ultratech, which is about 50 kg, cost around 390. Okay, so if they can increase the number, say to 450. Okay, so if they increase this number to around 450, if you can see that the cement per ton would go up from 8,000 to 9,000. So going up from 8,000 to 9,000, there will be a significant improvement in operating margin, which is like we have shown here. We have to increase here also. So if it goes by say 450, so you see that operating margin can jump from 24 to 34%. But
Yeah,
can they increase that price from 390 to 450? The answer is no. It's a struggle for them to increase the price by 10 rupees. Why? Because of Adani coming into the picture, ACC and Ambuja will try to increase their capacity, right? So
correct,
with the increase in their capacity, the supply in the market will be more, and it would be a hard time for Ultratech Cement with more supply in the market. It would be a challenge for them to increase the price,
correct,
right?
correct,
So,
correct.
once they taking in their operating margin, but unfortunately they cannot increase the price of the end product to improve onto their operating margins. So that is another challenge.
Yeah, correct, correct. Hmm. So overall, yeah, I got the point. So it's not a very shiny kind of sector wherein the outlook is positive for the next 2 to 3 quarters that we don't see in this case, especially cement sector. Uh,
Right, that's what is my view. Means I can be wrong, but the numbers are like predicting in a way that it's very difficult for this industry to make a comeback within the next 2 to 3 quarters.
yeah, correct. And especially when we don't know the scenario, like what will be what will be the energy requirement in the next maybe the coming winters in Europe, and how like obviously when they don't have any source of energy like gas, if they are not getting to source that, people would be moving to coal, right? So automatically that price will go up. It's most likely to go up. And when and winter is not like it'll end in December, not like that, so it'll be up till April sometime, it'll be winter, right? So March and
Yes.
April, so the next 5 to 6 months we have winter there. So automatically the requirement will shoot up.
That's true.
Yeah. Okay. So I think, yeah, this was as a, well, I think overall, if we look at the sector, this video is very helpful. It'll be very helpful to anybody watching that, because with all the details and everything, what are the components, the raw materials, the energy, and everything, it's very much detailed here in this video. So that will be uh, quite insightful for anybody watching it. So I think we'll close it here. And in this video description, I'll also put the links of all the previous quarterly results videos which we have done for this particular season, so that our viewers can have a look.
Yeah, yeah. That would be helpful, I
So
guess.
yeah, perfect. So thanks, Molloy, for joining, and we'll see you in the next video. Yeah,
Yeah. Thank you, Kalyan.
yeah. Thanks, Molloy. Bye.
Bye.